So, if we look at real estate as an asset class, it has a fairly low correlation with other asset classes. That's a good thing. However, it does have layers of fees and costs. If you're investing in a real estate investment trust, for example, like a hotel, well, you've got a lot of different fees and costs associated with that. First off, you've got the cost of running the hotel, the labor and the materials and all that you need to basically maintain that property. There's a management structure over that hotel property itself. And then the REIT has its own office where it's managing this portfolio of properties. So you have this office staff and the manager of that REIT that gets paid as well. So you have some layers of fees and costs there. Um, there's less loss of risky, less chance that you're going to lose a lot of money. Um, and my guess is that during basically the crisis that we've seen here it is February, or rather late March. The market is down probably somewhere around 35-40% from its highs in January at this point. The stock market is. My guess is that REITs have also declined, but they haven't declined as much. There are some additional tax filings if you own a REIT and a taxable account. You have to wait and get a K1, and sometimes those K1s don't come out very quickly. A lot of times you're waiting for those. Potentially lower taxes as a result, and due to depreciation, that also affects your taxation of the investments, at least in terms of until you sell your REIT shares or until the REITs sell underlying properties, because they basically pass through depreciation on you. The REITs could implode. For example, if you have a REIT that has too much debt and rental income goes way down, which it very well could. For example, this year, if a lot of businesses have to close uh, and go under because of the economic crisis we're seeing, um, if that were to happen, then basically the REIT might be forced to close and liquidate, and you could lose a lot of money in the result of that. So basically, you don't want REITs to have too much debt. It's nice to have some leverage, especially if they can borrow at low rates. It's well secured usually, but you don't want them to have too much debt out there, so that if there is a downturn, they can still sustain making those debt payments. So this just kind of indicates what's called funds from operations. It's one of those terms. You don't need to know this term. I'm just pointing out that it's net income plus amortization and depreciation plus the gain from the sale of assets. So if you look at just hypothetically an ABC REIT, it's got $15 million of revenue. It's got some expenses to maintain the property and have insurance and real estate taxes. It's got a depreciation expense. It's got some general expenses uh, like office expenses and the like. Uh, and so it's total expenses, and that leads to net operating income of $7,700,000. It also had a gain on the sale of property, and then it had some other non-recurring income or expenses. So its net income in this case, $7,825,000. But the funds from operations, you get to basically how much cash is being generated. You add back in that depreciation expense, and the result is that from a financial statement standpoint, sometimes you'll see a loss on the financial statement because of depreciation or losses from the sale of the property, but the cash flow that uh, REIT is generating and payable to the investors in the REIT can stay the same. So, another type of real estate investing is basically to get together with a group of people and form a limited liability company. It's a private way of doing it. You'll see this in pretty much every community around the country. A lot of times you'll see doctors get together and pool their money together, go out and buy office complexes that they in turn lease. Here's an example of a private placement memorandum. It's very much like a prospectus, but it's only distributed to qualified investors. and in this case then only offering $10 million at $50,000 per unit. So they don't want a huge amount of investors in this thing. Um, and in fact, the fund, because of the restrictions on the way these private offerings work, in this case, they want no more than 95 limited partners. And here's another one. This is a $100 million fund. The minimum offering amount, in other words, what an investor would need to invest is $2 million. So this is a very large private offering of a limited liability company where they're seeking very wealthy investors from all over the country to invest in this thing. And uh, you can also invest not only in units but also into promissory notes issued by that. Are private limited liability companies a good investment? Well, if you're in business, if for example you have a store and other people have stores and you want to get together, or like doctors want to have offices together and the like, um, then you can. It's a really good way of putting all the money together and pooling to basically own a whole bunch of offices collectively. Um, What's nice about that is you can lessen your management fees rather than have a real big company where there's a management associated with maintaining all these properties. If you have an office complex that, for example, has got 10 or 15 or 20 offices in it, uh, it's possible that maybe there's a really good office manager, bookkeeper, who can basically handle the office management of that on a part-time basis, so you can hire someone at a fairly low cost to do most of the management for you. Of course, the doctors are going to probably meet on a quarterly or an annual basis and review the financial records and discuss anything as far as major maintenance or improvements to property and the like. So there's a little bit of hands-on in there. Uh, you have to be an accredited investor, which basically means, under the current definition, you have to have gross income of $200,000 a year. If you're married, it's $300,000, or a net worth exceeding $1 million. So, a lot of doctors will meet that definition, certainly on the income side, depending on what type of practice they have, and they will buy into basically these privately traded, private limited liability companies to do that with. Just a little note here, the SEC is likely to revise its definition of accredited investor sometime this year, and these figures on what is an accredited investor will likely change. What's the best way to own real estate? Not have any management fees at all. Basically, you do it, you manage it, you maintain it, and the like. I have actually seen this work. Usually, it's in the standpoint of couples, where, for example, one person is really good at handling tenants and screening tenants, like for an apartment complex, making sure that they do basically credit checks on them and really good at bookkeeping and the like. And the other person is very skilled at maintaining property, so you don't have to hire a lot of contractors to fix things all the time. So that tends to be a very hands-on type of thing. Um, but you can have some really good returns there because you're basically lowering your maintenance cost and you're lowering your management fees, but basically putting in your elbow grease yourself in there. The risks are greater with that. There could be a lack of diversification. You're only owning a few units as opposed to, let's say, 700 buildings all across the country or something like that. And the risk might also be geographic. For example, you might buy an apartment complex in an area of a city or a town, but that area over time declines in terms of its attractiveness for some reason. It's not doing maintained well, that whole area of the city, and as a result, the value of your real estate holdings go down. Of course, the opposite could happen. You could buy some real estate that is in a fairly low rent or rundown area of town, and then the town expands into it, and all of the rents go up and the like, and property values go up. So I have seen this work in some cases. It usually works with uh, apartment complexes, or if you're getting into single family homes. The only way I've really seen that work is with a really small homes where the rents are like in the range of $500 to $700, and you really have to look at the real estate taxes in terms of making that work. Here in Kentucky, real estate taxes are not very hard, not very bad, but like a state of New York, real estate taxes are 4 times that amount, and you actually can't get enough from rents in a lot of areas of New York to help pay the real estate taxes, the maintenance cost, and the insurance, and it's make any kind of profit at all.